Hello and welcome to our Business Lunch. I'm Nisha Podar and with me is Sonia Shinoy. Sonia, good afternoon. What a fabulous rally that we are seeing on the markets today. A lot of it really aided by the oil prices really cooling off. And that's the kind of scenario that is really building up with Nifty 50, Sensex, both really gaining over 1.5% today. Midcaps also, as well as Bank Nifty, not too far behind. So each pocket of the market is really contributing, except for stray IT stocks which are in the red today, Sonia.
Oh, absolutely. It seems like a pre-Diwali festive sale in the market. I mean, there's so much to buy, at least for a retail investor. It is the banks which are ruling the roost this afternoon. Almost a 450-point bump up is what you're seeing in the Bank Nifty itself, led by IndusInd, Yes Bank, which are topping the charts. Bandhan Bank as well, up almost about 5.5%. But enough about our markets. Let's do a quick check on what's happening across the globe as well. It's been an across-the-board rally. I mean, look at that. Hong Kong up almost 1,000 points. The Japanese market as well. Big relief rally coming on board after what happened with the US-China trade talks and issues thawing over there. And as you can see, most of those markets are well in the green. So good time to get you some views on which way things are headed. Motilal Oswal released its annual wealth creation study yesterday. Lata Venkatesh caught up with the market veterans Ramesh Damani, Akash, Prakash and Ramdev Agarwal to get a sense of where the market is headed from this somewhat to next. Listen in.
I don't get bearish very easily. There was a problem in the market. I think the way the market responds in the last few days suggests it's fighting back. It's ignoring bad news. It's going up. 5 stocks in the A group have made a new high, which is something I take very seriously. A couple of stocks in B groups have climbed up to a new high. And there's probably extra amount of pessimism. I look at my individual companies, and I'm finding a lot of bargains in my portfolio. And I don't think bull markets top out like what happened in early October. I think this is a very serious correction in a bull market, but I think we'll go on to make new highs.
My hope remains, and I'm not like overly bearish, so I do believe that there's a reasonable chance that I mean, if you look into FY20 at least, if you look at the big corporate banks, earnings will come back, and with the rupee depreciation, some of the exporters' earnings will come back. So there's some reasonable chance or hope that it comes back. But given at the valuation levels that you are at, which Ramdev has, I think, a very good report, I must say, on Ramdev's part, and the data he's shown, I do believe that you need a very strong surge in earnings. And it can happen, but I think, frankly, it's 50-50. I mean, I don't know. I mean, it's tough to say.
There could be earnings explosion because we have not had earnings for a very long time. Actually, between 14 to 18, literally it's a complete drought of earnings. And now I think the moment I see the L&T results and many other results, I think economy is just about to, it looks that it is taking off, 45% growth in the capex build-up and all. So we could be at the doorstep of cusp of earnings explosion. That can change a lot. And then some more factors like, say, oil. If oil tumbles by $10, $15, I mean, that's a wish. It's not that easy to that to happen, but that can happen very quickly.
All right, a quick look at 2 particular counters which are impacted by the results. Punjab National Bank, a sudden downfall that is being seen, over 2% down now because of the numbers. And on the other hand, Bajaj Hindustan, that came out with the numbers and sparked a rally, 15% up on that particular counter. Of course, it's positive because it has really clocked in about 25 crore rupees of net profit against losses on a YOY basis. As far as finance cost is concerned, that's also on the lower side. But let's focus on oil prices, and oil prices under pressure with Brent really falling below the $73 a barrel mark, while NYMEX hit its lowest level in nearly 7 months, as we are just days away, remember, when the sanctions on Iran come into effect. So remember that crude has already lost around 15% last month. Let's take it straight across to a colleague who gives us more on this. CNBC's Dan Murphy tells us what the fallout of the sanctions could be, especially on the prices.
The second phase of the US sanctions on Iran kick in next week, and that's led some analysts to suggest that November could be a month of reckoning for oil. These sanctions are a big deal because they don't just cover Iranian crude exports. They cover a wide range of energy-exposed sectors, including Iranian port operations, shipbuilders, even financial institutions and insurance firms. Since the president's decision to reinstate the sanctions back in May, the key buyers of Iranian crude have been forced to take action. Some customers across Europe and Asia were quick to act, with Japan and South Korea curbing their imports and looking for an alternative. But Iran's biggest and most consequential buyers, like China and India, have been slower to comply. S&P data shows total Iranian crude and condensate shipments in October still averaged almost 2 million barrels, meaning the administration's ambition of zero Iranian oil exports could be a long way away. The uncertainty over exactly how many Iranian barrels could come offline, who could potentially be exempt, and who's going to make up for the lost supply has rattled the market. Prices moved back above $80 last month. That's a 4-year high. But analysts say diminishing fears of supply losses and growing demand concerns have since pulled prices back. Now it's unclear whether or not the full impact of the sanctions is being priced in, or if this key risk event next week is going to bring some upside for oil.
Okay, that's the big event to watch next week, right? But back home, oil marketing companies are rallying in trade on the back of softer crude prices and reports from agencies which suggest that the US is likely to give 8 countries oil waivers under the Iran sanctions. We spoke to the chairman and managing director of HPCL, M.K. Surana. Let's hear out what he had to say on the impact and oil prices going forward.
There are reports that the crude production from Saudi Aramco and Russia had been at its all-time high. Libya production has been more stable than what was there earlier, which has helped to replace some of the shortfalls which has come. And it is being said that whatever the barrels goes out of the market will get replaced. And that is probably the reason that the crude prices are softening. And it has come down from 86 to 74 or so. I do expect that it should remain in this range from 70 to 74 for some time to come.
All right, Dhanlakshmi Bank's Q2 numbers have been announced. The stock is up over 7.5% right now. Gross NPA at 7.8%. Net NPA coming in at 2.92%, which is lower on a QOQ basis. So the street is really liking those numbers. Stock is up. Let's, on that note, slip into a short breather on the show. But Bajaj Auto reported their October auto sales numbers, where they saw the highest ever monthly sales in motorcycles. So that is something that we are going to focus on in some time from now. But IOC, that is up, as all the oil marketing companies are, because of crude oil prices really lowering. That particular stock is up over 3.5%. But we are also expecting the numbers coming in for Indian Oil Corporation, and that is something we are waiting and watching out for. So IOC Q2 numbers
have come in, in fact, lower than estimated. The profits have come in at 3,246 crores, 3,247 crores. The estimate was about 4,794 crores. So profits on a year-on-year basis for IOC are absolutely, in fact, they fall in year-on-year. 3,246 crores versus 3,696 crores year-on-year. So lower than estimated in terms of profitability. The average gross refining margins for the period April to September have come in at $8.5 per barrel. So that compares to about $6.08 per barrel same time last year. And revenue figures as well, I think, just flashing for you, they seem to be in line, so there's not a problem there. Just that the profits are below expectations, and the GRMs have come in at $8.45 per barrel. So that's the latest that we're getting on IOC. But Sonal is also here. She'll give us more details. Sonal, anything else that you're picking up?
Actually, I'm still to open the press release, Sonia, but by whatever you've told me, they've given us the 6-month margins, but we need to know, we need to calculate those margins for the 3-month period. And also, we'll have to look at the numbers on a sequential basis. So by what the numbers they've actually given, revenues are largely in line. EBITDA is a big miss. It has come in at 6,700 crore rupees versus an expectation of around 9,321 crore rupees. Even EBITDA margins have come in lower at around 5.2%. We were working with a decline of around 270 basis points, but it is way below that number. So that is definitely, and this is something that we have seen with the other OMCs as well, right? Because of higher forex losses, higher operating expenditure, all of them have shown a major decline in the EBITDA and the operating profit margin number. And profits also are down this time around. If you could tell me what the profit number.
So the profits have come in at 3246 crores, which is a fall of 52% on a quarter-on-quarter basis.
Okay.
At compared to 6831 crores. So there's a big fall that we're seeing in the profits.
Correct.
In fact, there are two expenses that are mentioned in the press release for IOC. So employee benefit expenses to the tune of about 1,266 crore rupees. That is a one-time contribution for superannuation benefit scheme for this period mentioned. And on the other hand, the foreign exchange loss, now not to forget the rupee movement as well, 4,782 crore rupees included in the other expenses. So these are the two important bits which could have really, changed the way we have seen the numbers.
Also, Godrej Consumers numbers have come, so we should pull that up for you. The profits are looking pretty good actually, and the revenues are largely in line, but the profits are slightly higher than what the street was estimating. I think that's why you saw that move. It's because of a one-time gain that they've seen of around 260 odd crores. So there is a one-off that they've seen this time, a one-time gain. Adjusted EBITDA margins, they've given it for the India business has come in. Okay, that's the volume growth for Godrej Consumers. 5% volume growth is what Godrej Consumers has seen this time around. The sales growth of 10%, they say, has there has been a bit of an impact of the Kerala floods and the CSD of 1% on sales growth. So a bit of an impact of Kerala floods has been seen this time around. The EBITDA growth of 14% is despite a 26% increase in the A&P investments to support new product launches. So the EBITDA has been hit a bit. 18.3% is what they've seen versus an expectation of around 21 odd percent. I think this may not go down too well with the street. The fact that the EBITDA margins are lower than the street estimates. So 21% was the expectation and 18% is what they have reported this time. Mangalam is also here with us. Mangalam, over to you.
Well, these numbers are not that bad considering, the expectations of the street, because if I take a look at the segments, two of their segments have done very well. So the soaps business, that has grown about 11%. The street was working with a high single-digit number, mid-single-digit number. The second business that's grown very well is their hair colors business, which has grown upwards of 20%. So that is a positive. What hasn't done well is the household insecticides business. Household insecticides has fallen by about 2%, and that was something that the street was expecting, because if you take a look at the stock over the last 2 weeks, ever since Jyoti Laboratories came out with their numbers, their household insecticides business saw a decline of about 20%. So the street was factoring in, some disappointment in the household insecticides business already. So the stock had corrected a little bit. But right now, the fact is that, despite a slight miss on the EBITDA margin, the company has increased their ad spends, and they had earlier also guided that, this would be one of their bigger years in terms of new launches. That is something that the street will take positively. And Indonesia business, that one's done very well as well. 260 crores in terms of revenue. This compares with around 240 crores. So year on year, there has been an improvement, trying to get hold of the Indonesia margins. But I believe there's Bharat Forge too.
Yes, there is. But before that, this 5% volume growth that they've reported, Godrej Consumers, is it in line?
It's pretty much in line. The street was working with, a divergent set anywhere between low single digits to mid single digits. And in that case, 5% is actually at the higher end of what the street was working with.
Okay, that's good then. By the way, those are Bharat Forge's numbers. Revenues look much better than expected actually. 1679 crores is what they've reported in terms of revenues. This compares to an estimate of around 1500 crores or so. That's actually a healthy lot. So I'll just tell you, 1679 crores compares to about 1258 crores same time last year. So that's a healthy 33% growth that you're seeing in the top line. The margins, the expectation was about 29%, but they've come in at about 26%. So the margins have actually fallen a bit compared to expectations. Maybe that's something that may not go down too well with the street. We'll find out. But the revenue growth has been quite solid for them. I think the other expenses actually have gone up substantially for them. So it's about 467 crores of other expenses versus 340 crores same time last year. So about more than 100 crores of other expenses is what they've seen, because of which the margins have been lower than what the street was estimating. This is still a healthy set, but lower at least than what the estimate was. 33% top line growth and EBITDA margins at about 25.9% or so. Couple of key things that you'd want to look at. The shipment tonnage was very strong this time. So 16% growth is what we've seen in the shipment tonnage. That's because the Class 8 truck segment has done pretty well. That's the EBITDA number. The core number, 434 crores, it's largely in line. I mean, there's no big negative shock or anything. These are good numbers. Steady growth is what we've seen. The demand for Class 8 trucks in North America has been strong. Even the oil and gas and the industrial segment has done well because, oil prices have moved up and urban infrastructure activity has picked up. So those segments have done well. These are a good set of numbers coming in. Right. 33% revenue growth and margins. I mean, you could quibble here and there, but stable numbers.
But probably the margin is something, and the other expenses that has really hit Bharat Forge. But coming back to the other big result that we were talking about, IOC, and the street really was positive on the overall this particular sector today. And the stock had gone up, but then there is a little bit of shed from the top from IOC. So let me bring in Sonal for more details and analysis on this particular number. So, Sonal, you have more to add?
Yeah, so Nisha, I just calculated the margins. So the calculated gross refining margins are coming in at $6.9 per barrel. That compares with $10.2 per barrel that we saw last quarter and around $8 per barrel that we saw last year. So they've just given us the 6-month gross refining margins. For this particular quarter, they've come in at $6.9 per barrel. That implies a fall of 32% on a quarter-on-quarter basis and 13.5% on a YOY basis. So this is one important number. Fall in gross refining margins, something that we saw with the other OMCs as well. And that is, yes, that is a weak number to look out for.
Okay, thanks a lot for that, Sonal. Well, coming back to Bharat Forge, the management has put out a note where they say that they believe that the sustained high demand makes them very confident of a strong growth in Q2. These are important statements because generally they put out guidance about what the future looks like, and it is very optimistic this time around. They say two significant points to note in this quarter, which are inflection points for the company, is the commencement and ramp up of their aluminum products for the domestic PV business and a maiden domestic and export order secured from prestigious global OEMs for their CLWT facility. Basically, more orders is what they've been winning over the past few quarters. On the basis of that, they say that across commercial vehicles, passenger vehicles, traditional industrial and defense and aerospace, they are quite confident of the strong growth prospects for the second half of the year. And shipment tonnage, we had expected the tonnage growth to be 16%. It's actually come in at 18.8%. So almost a 19% up move in shipment tonnage. These are looking like a really good set of numbers and very good guidance from the management as well. EBITDA growth of 24.6%, revenue growth of 33.5%. They do mention, though, that, I think the EBITDA miss is because of the exchange fluctuation as well. They say that during the quarter, there was an adverse impact of 41 crores on account of exchange fluctuation on a revaluation of some foreign assets that they had. And the majority of the impact could be, is in respect of foreign currency loans. So that's the reason why they've faced a bit of a hit. Otherwise, the business is pretty strong for Bharat.
All right. So good set of numbers and good projections also. But those are the three numbers that came out, and you can see the stock movement as well. IOC is roaring at 5% up. But take a look at Godrej Consumer Product. If we can have the chart of that particular stock as well. And that has seen some bit of profit booking at the higher level today. So or has now still gone up. Actually, it's 4% up on the charts for Godrej Consumer. So all the three numbers really looking good as far as the stock price reaction is concerned. With that, we'll slip into a short breather. There's lots more to talk about the news. The RBI versus government crisis also going on. So we'll focus on that and the markets when we return on Business Lunch.